Dayal.
I'm Shama.
Hi, I'm Rajeev.
And today we have come here together to discuss what are commodities and what are the major factors that affect commodities. First of all, I would like to ask you, Akhil, what are commodities?
Well, commodities are essentially items that we take from nature. Nature like agri-products, coffee, sugar, these are commodities. Base metals, copper is a commodity. Gold is a commodity. Crude oil is a commodity.
So, I could infer that coffee is also a commodity for me?
Absolutely.
So, if we are talking about the factors that affect commodities, then it strikes my mind that what are the factors that affect my coffee?
Yeah,
Maybe
I have got something to
taste?
say regarding that. The right mix of the coffee and the sugar, alright, and the quality of the coffee and the sugar itself, plus the density of the air in the coffee, that is the amount of water vapors in the coffee, plus the mood in which you are drinking the coffee. If you are having the coffee with your boss, then of course that is something that will not be a pleasant experience for you.
Right.
Otherwise, if you are drinking coffee with your near one or with your relative or somebody,
Or a hot girl.
yeah,
Oh.
you're
The
right.
same coffee will taste much more better.
Yeah, you're right. I
Right.
agree with
So,
you.
so that means that just one cup of coffee could get into, could indulge us into such a big topic that it has got lots of factors that affect it. Now, if we just go into a bit theoretical way, that what are the major points that affect a commodity? Maybe
Yeah,
what
that's
could
fantastic actually.
maybe
If
prices.
we can relate the factors that affect the coffee, then in fact we can move our talk in the direction in which we can relate it to the entire set of commodities.
Alright, so now instead of taking coffee, let's generally suggest or just put in the top points that affect coffee. For me, I'm sorry, commodities. For me, I think price would be a very big factor that affect commodities.
Absolutely. Actually the prime concern about commodities is the price movements in the market. And price movements are essentially, but before coming to that, let's talk about why do we trade commodities? Why there is a need of trading
This is what I
commodities?
was having the question in my mind.
Yeah, exactly. Suppose I'm a farmer and I harvest sugar plantations.
Okay.
Then today I'm sowing my seeds. Tomorrow I will have a yield. And I'm uncertain about how much yield is going to come. It can be less, it can be more.
Right.
And accordingly, I will have prices of the sugar yield. And that's what is uncertain to me. So
Since we were discussing the major factors that affect commodities, the biggest factor that affects any commodity is price. The rise or fall of price determines the demand or supply of that commodity, which subsequently affects the demand, the actual, what will be the resultant of that commodity, whether people would like to trade in that or not. So, when we talk about price, it divides into two things, that will be the supply and demand. Now, if the price increases, like if I am talking about coffee and suddenly the price of coffee from 5 it gets to 20, the demand would decrease, because since the price has increased, many people wouldn't have that resources to purchase the same coffee at 20 when they were purchasing it for 5. So when the price increases, demand decreases and vice versa. So divide supply and demand or categorize them into separate categories. They can be broadly classified into two categories. One would be quantitative and the other would be qualitative. So now my friends Rajeev and Akhil would be explaining in depth about the quantitative and qualitative categorization of supply and demand respectively. Thank you.
I shall be discussing about the supply side factors that affect the commodity markets. Then there could be demand, inventories, weather conditions or OPC meetings. And these are just the 4 factors that we are discussing. There could be several other factors as well. So the basic factor is demand itself. Now suppose, and this is demand and this is supply. Initially they are on the same level. Now if the demand increases, then by the law of demand and supply, we have a clear indication that the prices will increase. Now there are two methods of increasing the demand. If the demand itself goes up or the supply comes down. In both the cases there is a relative deficit between the demand and the supply, and hence the demand is on the higher position and hence the prices will go up. Now we are comfortable with the demand factor. Now the inventories. Inventories has direct relevance with the supply side of the business. If the inventories are more, then the supply is more, and if the supply is more, by the law, supply is more, then by the law of demand and supply, the prices will crash. Similarly, weather conditions. Weather conditions have very high relevance to the agri commodities because the agri commodities have a direct effect on the yield of the business. If the weather conditions are favorable for the agri commodities, then the supply will again increase, and if the supply will increase, again the prices will fall. And the last is the OPEC meetings. The OPEC is nothing but an international organization, in fact, of petroleum exporting countries. If the board members of the OPEC decides to increase the supply of the crude oil, then if the supply is increasing, then the price will fall simply. And the vice versa is also true. If they are decreasing the supply, then the prices will increase as well. So this is all about the supply side factors. Now my friend Akhil will tell you about the demand side factors.
Hello, I am Akhil Dayal, and I'm going to talk about factors affecting commodities markets. Now, we should look at the factors that will affect the price movements of commodities in the markets, and there will be factors that we can establish a quantitative number to them, get the data, and establish a link between these factors and how they affect the price movements, analyzing these data. So in this segment of the video, we will be looking into how we reach out to those quantitative aspects. So let's take the demand of commodities, how it will get affected. Prices invariably are associated with supply and demand. My friend Rajeev has already talked about supply side. I'm going to talk about the demand side. So demand would increase in the system anytime money is infused, money is supplied into the system. And money supply is invariably associated with monetary policy of the country. And therefore, FOMC, or the Fed rates, Federal Bank of United States, which decides the interest rates for the borrowings from the bank in the United States, will determine how much money is being supplied, will control the money supply into the system, which in turn will affect the demand of commodities. Let's see how. In the recent time, United States was using a technique called quantitative easing. They were pumping money into the system in expectation to grow manufacturing and housing sector. Whenever money is supplied by the country into the system, they expect manufacturing sector and housing sector to grow. And whenever there is growth in manufacturing and housing sector, demand for certain commodities increases. And such commodities are energy and base metals. For establishing any factory, I will require base metals, coppers, aluminiums, etc. For running those machines, I might require oil. And same goes for the housing sector. So if somehow I can collect data that can show me if my manufacturing sector is growing in the country, if housing sector is growing in the country, I can get an estimate how these factors are affecting the demand side of these commodities. So PMI is an index that tells me how my manufacturing sector is growing. They tell me if PMI index is 50% more, my manufacturing sector is expanding. If it is less than 50%, it is contracting. And thus I can get an estimate about the demand the sector will be making for the energy or base metals, commodities. Same goes for the housing sector. NHA and Census of United States of America gather data about how many houses are being constructed, how many houses are constructed yet to be sold, how many are demanded to be bought, how many are being sold, and so on. Lots of data in detail about housing sector that will give me a picture about demand for these commodities related to housing sectors. Similarly, if money is given in hands of individuals, the first thing they will try to do is improve their living standards. And by improving their living standards would mean there will be a demand for agri products. They will eat more food for better health, and they will invest more in bullions. They will consume jewelry. They will consume more jewelry to look good or to have more of weddings and other functionalities. When we talk about gold and silver, they're also associated with seasonality. For example, in India and China, the demand pattern of gold is seasonal. During the Diwali season, the demand of gold in India is higher than in other months. So season becomes a factor in determining the demand of commodities and thus prices of commodities. Now we were talking about the consumption. We were talking about how consumption is nothing but demand. If I want to consume more, I'm demanding more. If I want to consume less, I'm demanding less. So consumption is affecting price. But sometimes what will happen is sugar prices are going down, or sugar prices are going up. I might decide to consume less of the sugar. So price invariably also affects the consumption of my commodities, and which in turn affects the prices of those commodities. Another aspect that we cannot quantify but can only estimate in qualitative basis is the nature of commodities. Commodities are traded in the underlying, and in the secondary market they're traded as a derivative. And we have discussed they're traded as a derivative to hedge the risk associated with price movements in the future. So what happens if futures prices are rising? Somebody can see it as an arbitrage opportunity, and they may start buying the underlying. So now the underlying prices are getting affected by the derivative. So this kind of arbitrage opportunity also affect commodities prices for the underlying as well as derivatives. So these are certain factors that affect demand side of the commodity prices. And one more thing is we always look for the dollar index movements in the global market as we can establish correlation between dollars, US dollar, and a commodity, price movement of commodity. And in the chart you can see that gold versus dollar has a negative correlation. Over a long period of time, we will see that if the dollar prices are moving up, gold prices are coming down. And if the dollar prices are going down, gold prices are coming up. Negative correlations. Whenever the dollar weakens, people start investing in the gold. And thus we can have correlation between all the commodities. For example, gold and crude oil has a correlation. Gold follows crude oil. And thus we can establish relationship using data. In many times we cannot establish relationship between factors and commodities, then we go for the qualitative assessment. Thank you.